Well, we're going to find out what you do own, what you do like, your highest conviction ideas. It's time for Pro Picks. Pro Picks is brought to you by ATB Financial. With $62 billion in assets, ATB Financial is powering possibilities for more than 820,000 financial services clients in Alberta and beyond. ATB's capital markets arm is a full-service investment dealer that offers investment and corporate banking, sales and trading, institutional research, and risk management. Visit atb.com/inthemoney for more information.
Pro Picks. All right. Should we start with the P?
Let's start with the P. This is on Peyto Exploration. We promised a natural gas name. This is a natural gas name. Tell me why you like it.
Yeah. Again, this is one we've owned for about 2-3 years. We bought it with a 14% dividend yield. As I was thinking, okay, so if I take a 2% position and it's paying 14%, that's 0.28% component of a dividend in the total portfolio. It's worth taking a 2% shot. The market did not like it because it had a lot of debt, and they've worked their way out of the debt. The dividend is still 7%. They've got a good capital discipline. And so I'm a happy Peyto holder.
They're a hedge. They believe in hedging.
They believe in hedging because they had so much debt.
Yeah.
And that's what you got to do. You have to do that. And so they did it, and now they're getting out of it. And now they'll get to benefit. And again, the natural gas price hasn't run away. So they can now get benefits of, let's say, $4 eco gas. More flows to them than not.
So I've been reading about these issues with Canadian natural gas, that there's just a surplus. Everybody was producing in anticipation of the LNG terminals being functioning and up and running. And they've had some growing pains as they open up. And so that has led to the situation of kind of a surplus. And that's obviously weighing on prices. Does that deter you at all from this thesis?
It makes me a little nervous, but it's not destroying the ultimate need for natural gas as a transition instrument. Gas prices are low in North America. That deters drilling. And the best solution to a low commodity price is a low commodity price, right, because they won't put capital in the business, and these businesses are more disciplined.
Calamity, comfort, or children? Which bucket is this?
It started as comfort, and it's still comfort. It's the 7% is my total return on equity. So
yeah, there you go.
Yep.
Sprott.
Yeah.
Goodness. We've actually had a few people recommend it. I think even Rick Rule recommended it.
He's long in there for
Yeah, that's right. Yeah. But a few months ago, we had a gentleman, James DeValos, come on when it wasn't like kind of moving. So this one has kind of been making its way onto people's radar, and it's doubled in the last year. It's a great resource exposure, I imagine, is why you like it.
Yeah, it's financial exposure to the resource sector. It's got leverage. And when we bought Sprott, I'd done a bunch of work just looking at their precious metal ETFs. Full disclosure, part of our gold exposure is actually Sprott physical gold ETF.
Well, that's what Rick Rule said. Instead of paying them a management fee to own their funds, just buy Sprott.
You buy that. You don't get the leverage, right?
Yeah.
And so you buy Sprott Inc. for the leverage off. And all you got to do is kind of see what the price of gold is doing, and then see the number of shares outstanding. And I think they get a 40 basis point management fee off that. That's almost free money, because the cost of the operation to them, they don't have to hire an additional analyst. It's kind of a no-brainer. So I got leverage to bullion price, I got leverage to the silver price, and leverage to the uranium price. So I get a three-way leverage off of silver, gold, and uranium.
I mean, they really had to bide their time and wait years for this, right? As they were creating these funds and these ETFs to get exposure. And now it's being rewarded, and that their assets under management are exploding higher.
Yeah, and I'm hoping to see a nice dividend increase out of them.
Now, I saw a downgrade, your favorite, talking about sell side. Yeah. This was a few months ago, but one of the things that caught my eye, and obviously a downgrade in July, like they left some money on the table.
Sure.
The stock just continued to go higher. But it did talk about valuation. So I keep coming back to this, that it's just trading at a premium to alternative asset manager comparables. And I imagine that's even more so given the stock is higher than it was in July.
Yeah, and we didn't buy it as an asset manager. And the hard part is, what sector does it belong in? And some people get hung up. I don't really care. I mean, again, to me, everything is an investment. Some are, we call them preferred shares. We call them government bonds. I don't get hung up on that. I've got income producing, I got growth. I always look at securities in terms of what they can do. When I looked at Sprott, it was just a fascinating play, sort of in financial services. We call it a gold company. We got to put it somewhere. So it's in our materials allocation if we had a materials allocation.
I mean, I'll tell you why I find it a tough time personally investing in commodities, because the cycle ends at some point, and the business, when the cycle ends, just won't be as good. How do you guard against that? Or what do you say to yourself to be okay with that?
I totally concur with that. When cycles turn, it gets darn ugly. And it has been really bad for 25 of those 40 years. But the companies have gotten better. They don't make the dumb investments that they've made in the past. You know what I'm perpetually amazed at in the gold run that we've seen over the last 2 years, there has been a dearth of new issues of junior mining companies. I mean, we used to get those things every minute. The brokers would always come up with a deal because there was another piece of like nothing. In fact, you're seeing the large cap companies, Newmont, I think it might have been Anglo actually, selling interests in their smaller companies. That's capital discipline. So these companies are coming out of a world where nobody bought them because they were crappy capital allocators to they're not that bad anymore. So there's a tailwind behind them.
Okay, let's end with your pick. It is a resource pick. It's silver. We haven't talked too much about silver, but that has also been a tremendous place to be. Silver is up 40% so far this year, and your pick, First Majestic, has doubled so far in 2025, but that's only taking it to the highest since 2022. So it's not even like it's all-time highs and has exploded. What do you like here? Is it just a continued call on silver? Is there something specific to First Majestic?
It's more call on silver being. So when you look at a precious metal cycle, gold tends to run first. Silver is the catch-up, but when it catches up in multiples. So we didn't have any direct silver exposure. And so I was just looking around, where do you get it? I've known this company, again, for years. I'm always intrigued. They have a mint where they do their own processing of their silver ore. It's kind of neat. It's a retail thing, but it's different. They have a policy of paying out a percentage of their revenue. I think it's like a tiny amount as a dividend. And I can see these revenues going up as the silver price goes up. Their mines are in Mexico, not A++ jurisdiction, but not bad. And I like that. And it's well managed. It's a company I followed for years and years and years, and I needed to get a silver name on it. It was a coin toss between that and Pan American, which is another good quality silver producer, but I picked First Majestic.
You talked about these companies not going out and doing stupid deals. They just did a huge deal a year ago.
And they got dinged.
Peyto Silver, and they got dinged. But like from the results this year, it's clear that that's already paying off.
Exactly. And see, the first mentality is they bought a deal or they made a deal. They bought a company, got to get out. It's terrible. Another mining mistake. Oh no, after you've been, beaten over your head with investors' bats because you've been a poor capital allocator, you're much more cautious. And so I kind of like companies that are making acquisitions in the commodity space, even at this time. And it's not just silver. So it's an interesting time because of the discipline of capital deployment.
Lyle, thank you so much. I've loved chatting with you.